Hello and welcome to the latest video from the AHDB Market Intelligence team. Today I shall be talking about the outlook for the global sheep sector. All three of the largest exporters in the world have set record-breaking prices this year. The GB deadweight SQQ reached new heights at over £6 per kilogram back in April, whereas New Zealand and Australia broke their respective records at the end of July. Prices in all three countries have become exceptionally close recently, with the New Zealand and Australian prices standing above GB prices at times. For the past 6 months, wholesale prices in China have trended closer to the beef price than they would have done in the past. This is largely driven by an uplift in demand, with supply not keeping up. In China, prices were very high in 2014, so it put consumption under pressure as customers resisted further price rises. Since then, prices have declined and subsequently risen again. Prices in China are now at a similar level to 2014. Overall, global demand is growing faster than the supplies. Lambing in New Zealand and Australia is now well underway, with the lamb crop in New Zealand forecast to decline by almost 4%, according to Beef and Lamb New Zealand. Reports from Australia don't yet indicate the size of their lamb crop, but do suggest that poor pasture conditions post a drought and high feed costs are likely to delay the time where a significant number of new season lambs come forwards in New South Wales. Production in China follows a cycle and typically rises after periods of high prices and declines after low prices. Much of this fluctuation is from the smallholders. Reports indicate drought and disease may, however, suppress production growth in the short term. This could mean that total supplies in the global market remain steady or even slightly below current levels over the coming 12 months. Overall, global demand is growing. This is caused by both an increase in global population and the growing middle class. Last year, per capita consumption in China came under pressure, in part due to the higher prices. Despite this, import demand from China has been strong through 2017 and 18. Looking forwards, GEO is forecasting a small increase in per capita consumption in China over the next 10 years. But due to the size of the population, this adds up to a significant volume. Typically, the UK is a net importer during the first half of the year, then moves to become a net exporter during the second half. This helps to balance the supply and the demand. With farm gate prices in New Zealand and Australia currently continuing to move upwards, domestic UK prices are not likely to feel the significant effect of this again until the start of next year, which is when the UK is typically net importing. During most of August, GB prices were lower than the New Zealand and Australian ones. While you may expect this competitive edge to help stimulate exports, the UK may not have the supplies available to export as production has been lacklustre for the past few months. Looking forward to the start of 2019, UK imports could continue to trend at a lower level that has been observed the past 18 months, but this will depend upon global prices and demand. This could in turn lead to tight supplies in the domestic market based upon the AHDB production forecast. To read more analysis on current global prices and keep up to date on supply and demand balances, please subscribe to Cattle and Sheep Weekly by emailing a member of the team via the email address on screen.